Good morning. It is, I guess, almost 10 UTC here on Friday the 17th, the day before the long US weekend and the inauguration of Trump on Monday. Yeah, so the big stuff here is really simple. It's a national holiday as well. It's Martin Luther King's Day, and the New York Stock Exchange is closed, and it's the inauguration day for President Trump. Markets are closed, but Bitcoin's expected to do some big moves around about those days, potentially even over the weekend. But going into next week, Thursday and Friday are going to be the big days. Specifically, initial jobless claims and then existing home sales is going to be big as well. Looking specifically to Bitcoin on the long-short ratios, massive increase in shorts across the board. Majority short has come in very aggressively since the move last night or yesterday afternoon, which was beautiful. We had a great retest, a nice flush out of local long liquidity before continuation up into the local high structure that we want to grab. On the funding rate side, we are now at bearish funding. We are well over 0.01, BitMEX still at 0.01. But some outliers like OKX definitely influencing that downside for market makers, right? What do positive funding rates do? They incentivize market makers and liquidity providers to take short positions. Now, we're not reversing yet. Just saying it's there, it's in place. So if we do happen to have some type of breakdown, there's definitely some incentive to push a little bit lower. But for the time being, there's no major failures across the board. Looking at the liquidation stuff, we are really close to one major big pocket. I think that's just going to be the number one thing that we care about here locally. That big pocket is definitely something that matters. This is pretty huge in the local structure, and this is the high that we want to break out of. If we start popping above this high, even just to grab liquidity, we've now made a very significant higher time frame higher high, and then we're looking at any higher low as a potential continuation move to have a move higher. So we're really close to flipping the script really hard. We talked about the gains earlier in the week. The 95K was the flip that took us higher. We said, hey, if we gain this, the trend changes and we must go higher. We've gotten it. We're about 7K up from that move, which is awesome. So now we're at a point of very thick, heavy, short liquidity right above this high. So we need to start talking about worst cases as far as liquidity grabs. On the actual heat map for where we have some of this stuff, even in the local price action structure, there's some orders at 185 and then 220. Realistically, there's nothing above this. So if we do pop the high real quick until we get into kind of a thicker short zone, there might be a bigger failure if we grab that liquidity and then fail. But for that to happen, we want to see a break above, a very big wick to the upside on the 1 hour and 4 hour, and then a sell back below previous highs at like underneath 102. So with that, looking at the chart itself, still looking upside and strong. We got the big retest on the swing structure yesterday, which was beautiful, 97.3, nice little tap and go. The V bottom recovery was beautiful, perfect test into the high, gain, continuation, new highs. So we're at a localized resistance point. If we do flush this point, the thing that starts to come into play is the higher time frame kind of grab of that liquidity. This move here has fully tested this highs. We're still at resistance on the 1 hour, 4 hour, a couple different time frames. So if we do grab that liquidity, and it's right above here, if I'll just turn the liquidations on this chart, it's right above us. It's a big block right up to like 103. If we grab this high, right, watch for a potential sellback. It doesn't mean we have to fail. The liquidity above this high is very juicy, as we saw on that previous chart. So if we do have a break above, followed by a sellback that gets back below these previous highs from back on the 6th, on the 4 hour close or higher time frame, then I would say this is a liquidity grab and you're looking for a failure to go lower. Right now, like I said, shorts are massively in play. On the retail side, everyone's trying to short this upside move. That's good for potential continuation. If we start to see those reversals, we want to see some local losses of level. What's the first kind of loss that starts to break stuff? Even down here at around 101, 101K, that's going to be kind of like the first break that starts to fail stuff on the lower time frames. We've grabbed some liquidity. There's still plenty of liquidity above us to potentially grab. And realistically, we're still targeting higher until we see some time frame failures below us. So for that, we want to see a loss here, but that's not enough. I want to then say, okay, we're coming back into the previous range high and losing the current daily open. If we start losing the current daily open, basically failing 100K, we have to come back towards the previous weekly and potentially lower. But until those things start to happen, realistically, we could have a bigger bounce move back at the lows. I'm not overly bearish or downside looking until we start losing December. And for right now, it looks good. If we're looking for some local flush outs, this is still potential. That doesn't mean we have to do it, but it's definitely possible. The thing that I'm still targeting is higher in that liquidity. If we get those localized failures, we want to see a flip. We want to see retail traders starting to long really aggressively. If they start smashing the green button and longing really aggressively, we should then see further breakdown and some retracement. But until that happens, we still have priority up, and we have to trade the priority. You're at a wonderful profit target still for the people who have been taking these longs in the higher lows all week. Play it as such. Don't fight the trend. The trend is your friend. And I'll see you guys on Monday. Yeah. We'll call it there. Catch you later.